Hey everyone, welcome back to the Flex Pregame channel. Today we're going to be taking a look at what went down this week in the market as the Fed Chair Jerome Powell had a speech on Tuesday. And it was a pivotal moment in the markets this week. And now that we've had a few days to digest it, we're going to talk about what Powell really said, how the markets reacted for the rest of the week, and most importantly, what that means for you as a retail trader and investor. So let's jump right in. So what did Powell really say? And before I get to that, I just want to take a little bit of time to get some shout outs. My youngest daughter's 14th birthday today. So I want to say happy birthday to her. I know she doesn't check into this channel and watch it, but I still want to say happy birthday anyways. I hope you're having a wonderful day. And to all the mothers out there, my mom, my wife, my daughter, I want to say happy Mother's Day to all of you out there. I hope you're having a wonderful day and a wonderful weekend. Now, jumping into what Powell said on Tuesday, like I said, May 7th, Powell had his speech that he gives to everyone, and he held rates steady once again, keeping the federal rates funds at 4.25 to 4.5%. And here were some of the key takeaways from his remarks. So inflation is not coming down fast enough. Powell said in his recent data shows a lack of further progress, especially with sticky inflation in services and housing. So things are kind of sticking at a steady pace. They're not coming down like he'd like to see. So, he's keeping rates the same until we see some more movement in inflation. And right now, he actually said they were in a wait and see mode. While the markets were hoping for a hint of rate cuts, Powell made it clear that no cuts are coming until there's consistent evidence that inflation is returning to that 2%. So he held his guns, he stuck to it, and again, he held rates to where they were. He also went over the labor market remaining strong. So Powell acknowledged that the jobs growth continues, but warned that any unexpected weakness could shift the Fed's tone. So we got to keep a close eye on that. If there is any movement in the jobs market, we want to make sure we're seeing that, because that could change, his stance on rates and actually may move him more to increasing rates. So he also touched on some of the geopolitical trade uncertainty. He referenced the potential inflationary impact of recent tariff policies, adding a layer of complexity to the Fed's outlook. So, though there still are some other things that are causing uncertainty. We know what happens to the market when there's uncertainty, and if we throw in, rate hikes, that could be some more news that could, kind of take the market into a negative direction. So we want to keep our eye on that as well. And the bottom line is, there's no pivot, right? Powell emphasized the Fed is not ruling out cuts in 2025, but they're not going to rush. And I actually was happy to hear him say that, because we know President Trump was kind of putting pressure on him to lower rates. And I think it's actually better for the markets if Powell holds to, what he said before. There's no surprises in that. We know what he's looking for in terms of getting those inflation numbers down to about 2%. But also that gives us some stability in knowing that he's not just going to be controlled by what President Trump says. So we don't have to worry about him, Trump coming out saying something, him changing rates, and that kind of controlling what's going on in the market. So we have a little bit more stability, which I think is better for the markets in the long term. But short term, if the data doesn't improve, there could be some uncertainty like we talked about, which leads to volatility. So we want to keep our eyes on that and make sure we're understanding what's going on, what he's talking about, and also what the numbers say in terms of data when it comes to inflation in the market. So keep your eye on that, and we'll keep on moving forward. So how did the markets respond to this news? So immediately after the speech, the S&P 500 and NASDAQ pulled back, showing disappointment that no rate cut timeline was confirmed. So we did see the market pull back. There wasn't any news that rates were going to be cut at any certain time. He did allude that there could be, but he's not going to rush. So the market did pull back based on that news. Bond yields rose, so particularly the 2-year, as traders recalibrated expectations on Fed policy. Tech and growth stocks took the biggest hits, as they typically are more sensitive to interest rate uncertainty. Meanwhile, the energy and industrial sectors held steady, showing a little bit more resistance and higher for longer message. So those are kind of what the breakdowns were across the board. And, by Friday, the markets are choppy, with investors now fully pricing out the June cut and lowering odds for even September. And even though it did pull back a little bit, it wasn't a crazy pullback. It wasn't anything that was major. It was just kind of that uncertainty, kind of choppiness, and a little bit of a pullback. Like I said, that's what uncertainty brings to the market, is that volatility. Uncertainty is going to continue to drive the markets for a short time. So we want to make sure that we are taking that into account as we're trading and making our decisions on investments. And in that, like I talked about in a previous video, we really like bear call spreads for uncertain markets because, again, it allows you to jump in without putting up as much capital. So you're putting yourself at less risk. And if the market doesn't turn around, it doesn't, go into a positive direction, you can go ahead and just keep taking in those premiums without putting yourself at risk and keep adding to your cash. And then you can use that cash to buy long-term investments if they're at good spots, or there's no problem just leaving it in cash until the market gets to a little bit more certainty. Now, if you do want more information on bear call spreads or anything else in terms of strategies that we do in the program, all you have to do is leave the comment flex in the comments below, and we'll go ahead and send you over our case study. And that case study will cover everything that we do, and also will allow you to book a call with us if you want more information. So again, put that word flex in the comments below, or if you have any other comments you'd like to add, go ahead and throw those in too, and we'll get back to you. And then next, what I want to do is kind of jump into what that means for us as retail traders and investors. And again, taking what Powell said and what his message means, if you are a short-term trader, prepare for more volatility. I can't say that enough. Uncertainty is going to lead to volatility, and you might have heard me say that about 100 times in this video. I apologize, but that's just what it is. Every new inflation or jobs report could trigger sharp market moves, especially with the Fed offering little clarity. So again, since he didn't give any specific dates on when he plans to cut, or if he plans on making any raises, he kind of just stayed flat, any news is going to have a big impact on the market. So make sure we're paying attention to the news. Again, that's why I brought up earlier that I think it's good that he didn't just take Trump's advice and cut rates anyway. He's kind of sticking to the data and making his decisions that way. But that means we have to pay attention to the data as well. And now for swing traders, it's time to be more selective, right? You want to focus on trades that align with current macro themes, and also like the strength in commodities or defense sector. So again, pay attention to the different sectors that are, taking advantage of what's going on or not being impacted as much by what's going on. But I also like to go a little bit further. Make sure that you know exactly what you're investing in. Any company, it doesn't matter, any sector, and understand what the fundamentals are of that company, right? Understand the story, understand what's going on within the company in terms of top line revenue, understand if they're still leading the market and are still able to generate that top line revenue through this uncertainty. That's going to help you keep, understanding if you need to keep those investments or if you need to make changes or if you need to do something else. So that's what we want to focus on top of just making sure we're sticking to certain sectors. Make sure you're actually breaking down each and every company that you're investing in. So long-term investors, stay the course. Be mindful the Fed is holding firm, and that could mean pressure on valuations if earnings don't impress. So again, continue to watch those earnings reports. Continue to make decisions based on the data. If you still like the company that companies that you're investing in, they haven't made any changes or had any impact. It's just basically everything external to that company that's causing stock prices to kind of be volatile, then stay the course. Look for opportunities to improve or add to your positions, because as things come down, that's an area where we can buy things on sale. So again, pay attention to what you're investing in and really understand the story. And lastly, what I want to go into is what to watch for going forward. So as we look ahead, some things we want to keep an eye on. Next week's CPI report on May 15th, this is going to be huge. Again, we want to take a closer look at the numbers because that's what the decisions are being made on. If inflation comes in hotter than expected, again, markets may have to price in the possibility of no rate cuts until next year. That could really cause some, uncertainty in the market and some volatility. Again, retail sales and consumer sentiment. So again, we are in a consumer economy, so it's very important to stay on top of what consumers are doing. And if spending slows, the Fed might have to pivot a little bit faster than he's letting on. So that's something we want to pay attention to as well. As earnings seasons wrap up, the results have been good so far. But guidance is cautious, right? And we know that the market is forward looking. So they're not only looking at the numbers, but they're looking at the guidance these companies are giving. So pay attention to that as well. And if that guidance turns south and, they start to give us that limited guidance or give us some negative guidance, that could put pressure on the market as well. And then lastly, politics and tariffs, right? So trade tensions are heating up again with new policies from the Trump campaign getting traction. If those proposals take hold, it could reintroduce inflationary pressure. Just as the Fed tries to cool things off. So we got a lot to pay attention to. Make sure we're paying attention to the data. Again, if you need a place to get that information, make sure you continue to check into the Flex Free Game channel. We'll have that for you. And that's really it. So Powell held the line on May 7th again last week on Tuesday. The markets pulled back a little bit, and now we wait for more data, right? So we have some more things coming up this week. If you're feeling unsure about your next moves, you're not alone. The time for caution right now and discipline is very, very important. So make sure you're staying cautious. Make sure you're staying disciplined. Make sure you're using the data to make your decisions on what you're doing. And again, if you found this breakdown helpful, don't forget to hit that like and subscribe button. Go ahead and ring that bell if you want to get all of our new upcoming information. You'll never miss any of our updates. And also drop a comment below on what you feel is going to going forward in terms of the market. And also, again, drop Flex in the comments if you want access to that case study. So again, that'll wrap it up for today. Hope this helped you out, and we'll see you on the next one.